Hi, this is Keith Schneider, CEO of MarketGauge.com, and it's July 24th, 2022 edition of Market Outlook. So, strong week overall. Let's get right into the charts. And first of all, thing that is most interesting is that we broke out above the 50-day moving average in all four indices and basically held up despite the sell-off on Friday. So, as you can see, the Dow, right, closed above its 50-day moving average, breaking out. The Qs also, even though that was down 1.76% for the Friday's action, but still closed up very strongly on the week. S&P, interesting, also still above that 50-day moving average. So this is definitely a positive sign. The other thing to note is that the two leading indices for the week were the ones that were the most beat up this year and actually hit overbought readings on the Bollinger Bands on the price chart and on our real motion. So that is definitely showing some short-term overbought. Now, it could work itself off by going sideways, which is something that we sort of suspect at the moment. And as you can see, the IWM here, Grandpa Russell, also outside of the Bollinger Band on price and on real motion and back inside. So in the process of mean reverting a bit. So net remains to be seen what happens here, and I would be looking for these indices to really hold around its 50-day moving average on any further retracement in terms of this mean reversion setup. So as you can see, the TSI minus 6.5 on the Qs, minus 5.43 on IWM. So basically, these were the two indices that were leading on the downside. Right now, what's interesting is you had a much weaker rally in the S&P. As you can see, not nearly as overbought and closer to that 50-day moving average. So I would definitely be looking at the S&P and the Dow to try to hold these levels. If we do, that'll be a positive sign. Now, one positive development that you can see here is that the S&P versus the safety of utilities definitely improved, certainly on a shorter term basis. So one thing is the utility index here, or the utility ETF, sitting just under its 250-day moving average, while the S&P obviously just broke out above its 50-day moving average. So net, right, on a longer term basis, right, the XLU utilities still outperforming, but on a shorter term, we got a nice pop, and that's definitely showing a risk-on scenario. Now, interesting, moving on to volume analysis and accumulation versus distribution, one thing we can see here is we got a improvement, but it's not all clear. I would have expected better volume performance. As you can see, we've got 4 distribution days in 3 out of the 4 indices, and actually in terms of the S&P, we've only managed 1 accumulation day over the last 2 weeks. So despite this really strong rally, the S&P up 2.59% over the last week, not on good volume. The other thing to note, however, is that the two leading indices over the last week, the IWM and the S&P, actually had improved volume. So net, the volume picture still iffy, even with this strong rally. I look at this overall picture as sort of a neutral. Would definitely like to see better volume patterns kicking in here for things to improve. Okay, now moving on to sector rotation, it's really obvious that risk on prevailed because number one, consumer discretionary spending up 6.8% for the week. Utilities risk off play down on the week 0.5%. So I think that really sums it up and makes it very clear. Risk on prevails here in regards to sectors. Okay, now moving on to market hotspots and a more global view, a couple of things are also interesting. Number one, and I think very important, is that interest rates actually, despite inflationary pressures, eased up this week with T-bonds up 2%. So that's a small move. However, psychologically, it's important that interest rates stop going up and actually reverse. So that's a positive. And that was across the yield curve, including the 7 to 10 year as well. So net, positive development regarding interest rates easing pressure on the market. So again, just to re-emphasize other issues is that things that make it a little bit confusing, natural gas up very, very strong on the week, up over 16%. That's huge. And one thing you can see here pretty much across the board that energy definitely jumped. And again, inflationary pressures. The other thing to note is that with interest rates easing, we got some easing of the recent pressure in metals. So metal and metal mining and even gold rallied on Friday, bucking the sell-off in the market. So that's the bigger picture. So what we're looking for here overall is the market to hold, basically digest those recent gains that were very strong the past couple of weeks and stabilize here. But again, the bigger picture, there's still tremendous overhead pressure and many of the key intermarket relationships on a long-term basis is still in a negative position. All right, hope this all helps. See you next week, and bye for now.